If China will course correct by upholding its end of the initial trade agreement we outlined in Geneva, and I believe after our talks in London they will, then the rebalancing of the world's two largest economies is possible.
All right, guys, U.S. and China just concluded a big trade deal.
We have a deal with China, as you know, but we were straightening out some of the points having to do mostly with rare earth.
Or did they conclude? Because their questions are rising. As President Donald Trump is saying that it is a win for the United States. That is, the trade deal favors the United States. But when you dig deeper, you realize that they are question marks. Here is the quest. China is shipping rare earth material upfront while the United States is busy throwing away student visa. That is, they are denouncing or deporting students from the United States. Meanwhile, US slapped a massive 55% tariff on all Chinese products in the US, and China is giving them just 10%. What's happening? And when we talk about inflation, it is creeping so fast. Headline CPI just rebounded by 2.4%. When it comes to translation, American consumers are taking the hit 5 times harder. The bond market is shaking. Deficits are exploding by 316 billion US dollar in just May. Even Canada is ditching Wall Street banks. Global trust is eroding so fast. So with all this, who really won the trade war? Who really won the deal that was made between US and China? What does this mean for the economy as a whole? And what does this mean for your money and your investments? There has been a lot of noise around the agreement, with President Donald Trump declaring victory and framing the outcome of an epic win of the United States. When you actually look through the fine print or what have been reviewed so far, the picture gets murky. So let's put apart what's real, what's the political threat, and who actually walks away with the super hand in the US and China trade war. Hello everyone, welcome back to my channel. Today we'll be delving into crucial matters which was wrapped up between the US and China during their last trade deal. If you're new to this channel, please don't forget to like, comment, subscribe, and share the video for more updates on trending topics such as bonds, investments, and intercountry trade. Of the agreement is China pledged to supply the US with rare earth minerals and magnets, materials critical to industries like electric vehicles, defense, and electronics. On the paper, it seems like a major concession. China front-led these exports, allowing the US to order as much as it wants. China like a win of the American manufacturing rights. Sounds like a win for American manufacturing rights. Here is the catch. China is essentially making the first move and trusting the US to follow through. Given the recent history of sudden sanctions and export bans, there is a risk bet. Belgium knows this, and this is why they have secretly and quietly imposed or inserted protections into the agreement. The rare earth license now comes with a 6 months validity period. There may also be a volume caps because China is not willing to let the US build a stockpile and walk away just like that. In exchange for this mineral shipment, Washington has promised to ease some export controls, especially around semiconductors. But again, the details are missing. Will China get access to diverse power H100 chips, a newer generation? Will Tokyo Electrons, ASML, and other advanced equipment suppliers be allowed to resume shipment? Until the US clarifies which tech controls being lifted, this deal feels more symbolic and substantive. Let's talk numbers. The US will maintain a 55% tariff rate on Chinese import, while China imposes just 10% on American goods. The imbalance alone should raise eyebrows. Tariffs are essential taxes that are being passed on to consumers or business. And at a 5-to-1 ratio, consumers are the one getting hammered. Thing from well-marked electronics to motor parts is going to see price hikes. Meanwhile, Chinese consumers feel nearly the same level of pain thanks to lower tariffs and the fact that China, most of the US export to China are basic goods which can be replaced from other BRICS nations. We are already seeing the effects. The CPI numbers shows headline inflation climbing back to 2.5% and a core inflation staying strictly at 2.8%. OPEC hadn't helped suppress oil prices. the data would be even worse. Tariffs are placing a structural flaw under US prices, and there is no way out of it. Decoupling from China may take years and even decades because these guarantee higher costs for American consumers. And now we shift from trade to something just alarming: US debt. Treasury yield are rising again, and they may saw the deficit balloon by $316 billion US. For the fiscal year so far, we are at 1.36 trillion US dollars. Last year at this time, 1.2 trillion. Even Besson, during the testimony to the Congress, admitted the deficit could hit 7% this year. The math simply doesn't work out. The rest of the world is noticing. Moody has already downgraded US debt, and the last domino is Japan, an eye agency. If they strip the US of its final AA ratings, funds in place like Hong Kong will be forced to cut exposure to treasuries. This isn't a fringe problem. Japan and Europe hold over 37% outstanding US bonds. In a surprising twist, Canada just issued a $2 billion US bond without involving any US bank in it. This hasn't happened in 14 years now. Wall Street, long a key export for the US economy, just got declined. Ontario used bicycles and domestic Canadian banks instead. They sent a loud message: American financial dominance isn't untouchable. Financial services are the third largest US export, right behind travels and IP license. And with the US tourism down and the other countries diversifying their financial relationships, this is yet another pillar showing cracks. So where do we stand now? China has 6 months levies on rare earths, and US consumers are paying more every day for daily goods. Inflation is rebounding, deficit is exploding, and Wall Street is losing clients. Yet we are supposed to believe that the US got the best part of the deal. This agreement looks like a temporary pause in the long conflict and not a resolution. If the US doesn't follow through and ease tech cuts, we will be right back to square one another around of the meeting in Geneva, London, or wherever the political thread takes us next. So who really won here? From the stance, it looks like China got the short end of the stick, but dig deeper and it is clear that the US is the one facing the long-term pain. Structural inflation, global mistrust and a weakened dollar position are all brewing just above the surface. Is this deal solid as Benson claimed? What are your thoughts? Let me know in the comment section, and please don't forget to subscribe to my YouTube channel for more arising topics and updates on the US China trade war, and also to get more insights on your investment in golds and other silvers.